By the end of this video, you'll have a very solid understanding of how to use the VWAP as well as several tips and tricks to use this indicator very effectively in your trades. As always, the only thing that I ask for in return is that you hit that like button, and also if you see value in this video, subscribe for more short, sweet, and simplified videos on how to trade the stock market. Okay, so the VWAP or VWAP doesn't really matter, is the volume weighted average price, but put simply, the line indicates the average value of a stock traded over a set time period. So the purple line is literally the dead center or the pure average of the price value for that time period on the chart. If you point to a specific point on the chart, you could say that, for example, at 9:41 a.m., PCG was trading at like 12:10, but the average adjusted for the entire day at that point was 12:25-ish. So with that information, you now know that at that point in time, shares were trading below average. Okay, so let's go ahead and label everything. So to start, you already know that the purple line indicates the VWAP line, and it's the most important part of the indicator because it tells you whether or not a stock is trading below or above average for your selected time period. The top line is the 75th percentile of the average, and the lower line is the 25th percentile of the average. Now, if you think about this in terms of an analogy on height, for example, if you're on the 75th percentile of average, you're likely to be considered pretty tall, and if you're under the 25th percentile, you're likely to be considered pretty short. Likewise, if a share price is trading above its 75th percentile, that is statistically significant and is one early sign of a more sustained upward trend. And if it's trading below its 25th percentile, a sign of a more downward trend. But of course, these indicators don't predict price action, but are rather statistical tools to predict the probability of where the price action is going to go. Now, to understand why the VWAP and this information is important to you on a practical basis, let's go over how it's used and what it's known for. So the VWAP is famous for being used by institutional investors and big mutual funds, as well as these computer algorithmic trading platforms. When your Uncle Billy tells you that the stock market is rigged by those at the top, this is who he is referring to. Now, the reason these big corporations like the VWAP is because these players buy extremely large amounts of shares, and thus if they aren't careful, they could move the share price overall. Think about it, if you're buying $200 million of shares in a billion-dollar market capitalization company, this is obviously going to have a huge effect on the share price. That's also why individual traders such as you and I stay away from super low volume stocks on an individual scale, because it's going to be very difficult to get into and out of positions at the price points that we want if it's such a low volume stock. But anyways, in summary, the VWAP helps protect institutional investors and automatic algorithms from this problem by indicating a good position to get in based on the statistical formula employed by the VWAP. So to add the VWAP, all you need to do is go to studies and then add study, then search for VWAP. I'm not going to show that because I have a whole video that discusses how to add it, and this video is more about explaining the VWAP. So returning to PCG, we can now go on and better analyze what is going on with the knowledge that we just learned. A dip below this purple VWAP line means that shares are being traded below average, and a dip above the purple VWAP line means that shares are being traded above average. This is important because it's good to know whether or not you're buying in at a higher than average price or at a lower than average price if you're taking a position. That being said, it's not necessarily bad to buy in at a higher than average price or good to buy in at a lower than average price. So the explanation for this is that VWAP lines serve as a sort of support and resistance. If we look at the time span, we can see the price is trading above average, and we see a dip to the VWAP line, but the RSI is also indicating that the stock is oversold. Now, you may be wondering how a stock can be both oversold and above average in price. Simply put, that's because when a stock is trading above the VWAP, that serves as support, and I mentioned that earlier. As you know, when a stock dips to support, it's considered a discounted position, and it's simultaneously marked as oversold on the RSI. Okay, great. So when the price dips below the VWAP line, that line switches to resistance, and the lower 25% threshold serves as support. Now, this is where it gets interesting. So going back to one of the most helpful uses of these lines, is that they give you an early indication or warning sign of a more sustained upward momentum. If you see an increase above the 75th percentile line, that's an early warning sign of this uptrend. And if you drop below the bottom line, that's a bigger sign of a downtrend. This makes a lot more sense when you think about the rules of support and resistance. When something breaks above resistance, that's a sign we'll see higher highs. And when something breaks below support, that's a sign that we'll see lower lows. While this is true by definition, You must use your understanding of the RSI, the MACD, and most importantly, the SMA to most accurately predict how far up or how far down these are going to go afterwards. So at this point, you should have a good general idea of what the VWAP is and how it is used. So let's go over another example to really beat this in. So let's look at Tesla. Now, if we are looking at Tesla intraday, we can spot many points where the VWAP would have been useful. First off, the stock price pretty much held support and traded below the VWAP and held about at resistance. The thing here is we did see several breaks above the VWAP line, but they failed to support, so that wasn't a strong indication of a continued uptrend. Now, when we saw this more consistent gap up later, which, by the way, had consistently growing real estate between itself and the SMA line, which is why it's so important to combine your usage of other indicators. But we then saw a breaking above the VWAP line, which means that this VWAP line was no longer resistance, but now serves as a support line. As a reminder, when shares are trading under the line, it serves as resistance, and when shares break above the line, that serves as support. Anyways, now as we know from the price action earlier, a break above the VWAP line means that we are experiencing higher highs, but it doesn't mean that the stock will continue uptrending. But again, an early sign of a continued uptrend was this consistent gap above the SMA line, and most importantly, this consistent overall dipping back and forth from support. Then later we saw a gap in the SMA line and a continued uptrend. I just want to reiterate that these indicators are never an end-all be-all of the stock market. It's really about developing a skill set and working knowledge around using all of these indicators in conjunction with solid strategies and more consistent practice. Honestly, it's all about practice and learning. You have to absorb all this stuff like a sponge. And the best way to do this is by watching these videos, by watching other trader videos. A lot of traders don't recommend you to watch other trader videos, but there's such a plethora of knowledge on the internet that you could absorb. And it's super important for your trading to just take in all the knowledge you can, and as well as all of the practice. But anyways, if you have any questions for me or comments or whatever, comment below. We also have the ZipTrader Circle Facebook group, which I plugged a bit in the beginning, but it's really a great place to learn, and it's really a great place to connect with other traders, because at the end of the day, it's all about building a community and being involved in this greater trading community. But anyways, I hope that this video was helpful for you, and I'll see you guys in the next video. Have a great week, folks.